So before you open your first brokerage account, and it doesn't matter who you use, your preference of choice. For me, I've been using AMP Futures. Maybe some of you are using Tradeovate, NinjaTrader, and a list of other brokers out there that allow you to trade the stock indices or indexes futures. Okay, now what you want to do is do your homework first, okay? And I'm going to say this. Make sure before first of all, decide if you really are truly passionate about trading futures, okay? And not just in the idea or mode of thinking that I want to trade or make some quick money and that's going to be it. My interest lied in trying to make a career out of this when I first started. It was difficult at first because I made errors and stumbled upon mistakes just like most people out here when it comes to when you first starting off, right? So my biggest failure was not understanding how to read the market correct way, market structure. And I did a great video covering and surrounding that topic. I believe it's about 45, maybe 50 minutes long, maybe so. But I posted it and made it available for all those who are interested in the video content surrounding the private community. Maybe you want to become an elite or an ultra elite supporter of the channel. Very inexpensive. I'll talk about it towards the latter portion of the video because that's where I really go in and reveal the strategy and how I trade, the blueprint, the cornerstone to how I trade, supply and demand. But I show you and educate you on how to properly read the market. That's the biggest thing when it comes to market structure and price action, because you don't need all the fancy indicators to really help you out in your trading. Because most indicators, 95% or more, are lagging anyway. You have to understand that unless you're using some level 2 indicator that is going to, say like cum delta. I like to look at cumulative delta. I have it on my charts. It does provide me some insight, especially when the market gets back to an actual level. I can look at it and kind of see the orders hitting the books at that particular time. Those market orders hitting, and that helps me. When it comes to marking up my charts, first and foremost, higher range, lower range charts, that's what it all starts at. That's what the strategy is all about. I'll go into detail about it. But level 2 indicators really kind of give you a behind the curtains look as far as what the orders look like hitting the books, okay, in a sense. But I primarily like to look at cumulative delta because it's a very strong and powerful, tool to use, a tool set to use when it comes to trading, as well as with my volume profile. But you don't need it, okay? I'm going to be honest with you. If you know how to trade price action, pretty much, because most people trade based on looking at price action, but having that extra, insight, and I'll probably do a video about that in the near future, but it's not something that I have my eye set on every single day. I'm more so looking at marking my charts up, and then from there moving forward. But anyways, getting back to what I was talking about the brokerage account. Yes, AMP is my broker of choice at this moment. I've been using it for years. I'll say that now. But if I ever make a switch, it'll be to someone probably where, like NinjaTrader, because that's the charting platform which I use. I just never made the switch and marrying up with NinjaTrader when it came to using both their platform and brokerage and service. Because when I first started, NinjaTrader and Futures were, doing business together. And AMP also offered a variety of other platforms, okay, that you could use with them as being a broker. But with NinjaTrader and AMP, they severed ties many years ago. But I'm grandfathered in, so that's why I'm still able to use the two. Now, if you're someone out there that's looking for a broker to actually use and you're interested in opening a brokerage account, first and foremost, I hope you know how to trade the correct way. Hope you have a system put in place. You have a plan put in place for yourself that you are going to stick by when it comes to trading the stock indexes, right? For me, I'm primarily trading the NASDAQ. I look at the ES. I dabble in gold from time to time. But most lately, I've been really trading heavy on the NASDAQ, to be honest with you, okay? But I like trading stock indices, okay? I'm going to be honest. Now, let me say this. Again, market structure is imperative. I'll kind of go over like the premises or basis of it, in this video here very quickly. But I did do a great rundown and depth detailed video of market structure for all the elite and ultra elite supporters. That's one of the perks that you do receive, is that additional private community video content that is very educational for individuals that are interested in becoming a supporter and joining that program by becoming a member. It's very inexpensive. Again, I'll talk about it towards the latter portion of the video. Now, Look, market structure is imperative. All right. Once you understand the proper way of how to trade, structure, price action, you can identify zones, both using top-down analysis. For me, I'm using range-based charts. Maybe some of you are using time charts, but always start with a higher chart to get a perspective of what is the market doing from a global standpoint. Is it pushing higher, breaking structure, or pushing lower, breaking structure? That's part of the things or part of the steps in which I look at when it comes to myself, look for opportunities to trade from. All right. But when it comes to choosing an actual broker, okay, before you get ready to open your account up, you really want to kind of size things up and look, okay, as a trader, we're all about trying to save costs, right? We know there is cost involved, whether it's the platform we're using, the data feed, whether it's the commissions, the margins, understanding things of that nature, okay? The margins, for all those that don't know what I'm talking about, that means whatever contract, meaning whatever instrument, maybe you're interested in trading the NASDAQ 100 or the E-mini S&P 500 or the micro version of that, whatever it may be, there's a margin attached to that, meaning your broker or the broker of choice that you're interested in looking at, for every instrument, there is a set defined margin amount, meaning that is the amount of money per contract that you need. So say, for example, many of you probably using NinjaTrader as your broker, right? Or maybe some of you are using other brokers as well. But the margin, say, for example, for trading the E-mini S&P 500 with NinjaTrader as your broker, I believe it's $50 per contract. That means that day trading margin intraday, you have to have a minimum of $50 per contract in your account, depending on the contract size you're looking to trade. So if you're someone that's interested in trading, say, 3 contracts, you're going to need to have like $150 in your account. But I don't recommend, because you have $150 in your account, to trade all 3 contracts. Okay, I'll talk about here in the video about having a $500 account or a $1,000 account and growing that trade in the micro future. So please spend some time watching the video content, on the channel. Just as well, if you're interested in trading like the NASDAQ full-on E-minis or the full-on E-mini S&P 500, okay? There's a difference there. The micros and the full-on E-minis E-minis is 10 times the size margin amount than the micros are. So as a beginner trader, someone with no experience, but you are on your journey of learning how to trade, maybe you're watching the video content in this channel. I'll make it very simple when it comes to the strategy. So if you're interested, the video content is where you want to really start at. For all those that really want to kind of curve the edge and kind of speed things along and understanding the strategy, the breakdowns of trades, understanding, the in-depth thought process behind, the strategy as a whole, you might want to become an elite or an ultra elite is what I'm trying to say. But anyways, so when it comes to trading, you want to be able to determine the cost factor. What is, how much do I need? Because that could be a limitation for you, as far as like one broker may be more expensive when it comes to trading margins versus another broker, right? Some are slightly higher. I mean, some are a whole lot more higher, okay? Some of them have a minimum requirement just to open an account up, all right, even outside the margin. So to list a few that are very, I believe, cheaper or inexpensive brokers when it comes to opening a futures account, definitely AMP. But again, you can't trade NinjaTrader with AMP, but they do have a variety of other platforms you can use. Maybe you use someone that uses TradingView or Sierra Charts. There's a list of other ones if you go to their website, ampfutures.com. Margins could be a deal breaker. Secondly, commissions can be a deal breaker as well. Some brokers have slightly higher margins than others, okay? Again, NinjaTrader and AMP Futures, I believe, and even TraderVate have some of the least or expensive or inexpensive commission fees. All right, you just go to their site. You can look up commissions based on there or contact them directly. I've actually done a few videos discussing or breaking down when it comes to like AMP Futures, for example, and I'm not getting paid by them or any kind of sponsorship with them. I'm just telling you because I use them and I've been using them for 15 years now, or had an account with them for 15 years. But again, the first 2 years I'm putting it out there, like I've always said, I struggle with trading, but I only funded my account with a small amount of money. So I'm telling you this now, before you even you can do your homework, and before you even fund your account, do that homework to determine who you want to use as your broker, because the overall savings again of commission fees and data fees, platform fees, all these different things come into play when it comes to how much money, are you going to, spend out each and every month. Some are going to be a whole lot cheaper. Some are going to be a whole lot more expensive. So do your homework there when you're, trying to figure out what broker to actually choose. But first and foremost, you want to learn the correct way how to trade. Educate yourself the correct way. And that's what I provide here as the tools to basically where you can watch the video content. I mean, I don't have a trading course or a mentorship program. I truly believe in making video content that lies out or breaks down a blueprint of how I personally trade. And through video content, if you watch it, you pick up tidbits and pieces and nuggets and things in which you can help you in your own personal trading. Because trading shouldn't be, very complex. You should make it as simple as possible. And that's what I'm telling you right now. I can't stress it enough. Market structure is the key to and the binding glue to this whole thing. Okay. Now, what am I saying when I say structure? Structure is just basically, okay, which way we're moving. Look at a higher base chart, whatever you're using, whatever you have experience chart-wise using, whether it's tick volume, time, or for me, range. A lot of people have come to the channel and have actually converted over from using time-based charts to range charts. Why? I've said this a million times over. It's just cleaner to the eye. And again, if you're looking for that comparison of what is a 5-minute chart, compared to on a range and vice versa, there's no comparison because, they are calculated differently. Time-based charts are calculated differently than range-based charts. So understand that. All right. So first, figure out from a higher perspective, what is the market doing? As long as you're breaking structure to the upside, then we should be looking for bullish runs to the upside only and setups to move with the structure to the upside. Now, market structure is very simple and it shouldn't make it, complex. Now, okay, say for example, we have this bullish run to the upside right here. It's just like a quick, little one-on-one market structure video. Okay, it's not going to be anything in depth. I'm just showing you highs, higher lows, highs slightly breaking above here, but we break right here to the upside. This is a valid demand zone. Okay, all right. Here, this is just a slight breaker structure. Okay, I want to see what the market's closing above. So as long as we're making bullish runs where the market is breaking and closing above with the candle, then look for pullbacks to key areas of demand. Push up, pull back, breaking higher, pulling back, breaking more structure to the upside. This could have been a valid area of demand right here if the market came back, but it didn't. Okay, breaking more, coming to the upside. Okay, let's see here. Well, this right here is actually the demand zone, no breaking structure on this area right here, but the market did reject from it, so we got a high, higher low, or a higher low, and the market breaks here. This could have been a valid demand zone. The market came back here. Now these are off the higher range chart, but this is where I start at when it comes to the strategy, is marking up valid zones based on structure breaks and the direction in which the market is moving. We're bullish. So I'm only looking for pullbacks to key areas of demand. Okay. And if you don't know what demand and supply is and you're still scratching your head, demand is areas where the market is bullish to the upside. We have it pulling back to key areas of aggressive buying, and inverse of if the market is moving to the downside. We're breaking structure higher, pulls back, break structure slightly right here. This is a pullback off of a higher range chart to a valid area of demand. You probably could look for something here, but I'm not taking my trades off of the higher range chart. I'm looking for pullbacks to areas that I mark up off the higher range chart, whether it be supply or demand. And in this case here, because we're bullish to the upside, demand zone, mark it up. Then I scale down and move down to a lower base entry chart, a chart that I trade from once the market taps my zone, and I'm looking for that point. Okay, if we're bullish to the upside and we are having areas of demand, and I mark them up on a higher base chart, then I want to see a demand setup, in proximity where the demand area is set up on the higher range chart, but I want to find that on a lower range chart to be in sync and have confluence with the higher range. So a demand setup on a higher range and a demand setup on the lower range, if that makes sense. Okay, so yeah, pushing to the upside here. Market comes back. Again, this is, and there's a difference in what's called low probability versus high probability in my books based on trading supply and demand. I'll talk about that especially to those who are like the elite or the ultra elite supporters, where I'm breaking the trades down, where I'm going to great depth in video content. That is a major and important factor there, understanding, what's the difference of high probability versus low probability. And it's a simple thing, okay? I talk about it all the time, or in most times, a lot of videos, okay? So, again, watch the video content. But yeah, so as long as we're bullish to the upside, I'm only looking for a directional pull of movements to the upside with the market, okay, on my lower range chart, all right? So, basically, in a nutshell, if structure is just constantly doing something like this right here, to the upside, highs, higher lows, highs, higher lows, highs, higher lows, and higher highs. These could be areas of demand marked off right here. We just mark them up real quick. Okay, here, whoops, here, and here. All right. Now, if the market shifts from being, very bullish to the upside, a directional shift where the market shifts, meaning with the tide changes, is where we're going to make a low, but I'm not ready to go short here. This is a signifying, thing that you can find or you'll see when the market makes a low and then a lower high. This is the first sign right here where it makes a lower high. You can say, okay, maybe it's trying to go lower, right? Okay, it breaks structure coming to the downside, and we're looking for it to break structure to the left-hand side as well. So if it takes a low, makes a low, lower high, and breaks structure lower, the market direction has shifted from bullish to bearish, and now this could be a supply area to look for a pullback to go short. That is market structure as a whole. Now, it can be more complex depending on the movement of the market. It's not always going to look as clean as this, but I'm just telling you that that's where I go into detail about, information surrounding market structure more so, and for the elite and the ultra elite members. Now, let's talk about that right quick for anyone that's interested. The elite members, they receive all my trade breakdown videos. All right. So there is a Discord community. All right. It's part of this community here. The link is down in the description portion of the video. You click on it, you can join the Discord. But that's where I'll post my trade entries, okay? At least, not all of them, but at least one or two a day that I take, or whatever the case is. But I'll go back and I'll break them down for those individuals that are part of the elite and the ultra elite supporter program, okay? And I'll tell you how you can join if you're interested. What you receive as an elite or an ultra elite supporter, you receive the trade breakdowns, because that's where I go into detail about the strategy surrounding the setups that I post over in the Discord. I'll break it down, talking about structure, my mindset, the thought process behind each one of the trades I took, where I took profit at, where I placed my stop loss at. But I walk you through what I was thinking leading up to the actual trade, because that's the biggest and most important thing is that, yeah, okay, you post an entry, but why did you trade that? Okay, that's what people want to know. So that's why I break things down in detail for you if you become an elite or an ultra elite supporter. But you also receive the video playlist and a great video covering market structure. Now, if you want to become an ultra elite supporter, that's where you receive everything I just discussed, plus the live recorded trading sessions. All right. Okay, that's where I'm recording my trading sessions, talking to you as the market is moving. I'm analyzing the market, doing top-down analysis, looking at higher time frame, lower time frame, and you see me actually take trades within the session there, and I'm walking you through each one of those trades in great detail. All right, so the choice is yours if you want to become an elite or an ultra elite. Very inexpensive. The link is down in the description portion of the video for anyone who's interested in joining. It's titled Ultra Elite Supporter. Once you click on that, give it a couple seconds. 3 tiers will pop up. So once they do choose, you can click on either the elite or the ultra elite, and it's going to tell you the perks and rewards that you receive for each tier there, and it's all through YouTube. It's through their YouTube membership program, okay, for the channel here, okay. But outside of that, guys, that's all I have. I appreciate each and every one of you tuning in today. Hopefully you learned something new. Maybe this video had helped you out in some form or fashion, But if you're not a current subscriber, please take the time to go ahead and sub by clicking the sub button down below. Make sure to turn your post notifications on, okay? If you really want to receive the video content here and be notified when I drop new videos. But outside that, if you found value in today's video content, please make sure to drop a like on the channel. I appreciate it, or on the video. I appreciate it. Take care, and I'll see everyone in the next one.